Good morning, trading world. It is May 27, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. This morning I have a little rant that's been building for quite some time now. Ever since Charles Schwab bought Thinkorswim, the trend of this product has sped up to the downside. Reliability and execution are getting worse every week, it seems. This morning, data on certain time frames is missing or won't pull up, and this is affecting my morning analysis. It is throwing off my spreadsheet, which is trying to draw data, and there's nothing there. So there is just gaps missing in the data and on the charts. 30-minute chart is working fine, but when you look at the hourly chart, this is what you get. It's just missing. It's gapped. This is really starting to get nerve-wracking. In my opinion, there is not a broker out with better charting, option analytics, and portfolio tracking all in one package. Thinkorswim has been, at least in my opinion, the best at that complete package for a long time. But I guess it's time to start planning for alternatives. I use 4 different brokers, and nobody has that all together package where I can just seamlessly move from one thing to another all there in one platform. But like I say, I guess it's time to start looking for the alternatives. Because of the gaps in data this morning, I'm going to use a little trader's intuition to kind of fill in some of the gaps. My trader's intuition is that we will probably open with a gap in internals and price action. And in the first 30 minutes or so, or first part of the trading day, it may give us a scare as we start to pull back out of nowhere, retracing back to somewhere around or below 400. And because of the gaps, all this is going to take place while order flow tries to catch up and rectify the gaps. And then once that happens, we should resume the bounce. And actually, there are 2 different ways that this can kind of play out, which kind of leaves the second way to kind of leave us with a big hole in the middle of the day, where we continue up the first part of the morning, and then out of nowhere, when the order flow catches up, we crater for a decent portion of the day. And everything out of nowhere turns around, and we start back up, reaching back pretty much to the highs where we left off at. Also, in my trader's intuition, if we get above 415 to 417 today, I will be looking to re-enter some short positions. Remember to start watching the top products on the Dow for the rollover. Things like UNH, Goldman Sachs. The list is on yesterday's pre-market for those that want to know specifically. With that, as you can tell, I'm not that enthused about the levels today because of the gaps in data. But give me just a moment and I will bring up the levels of the day. Alright, here we are with the key levels of the day. Starting on the resistance side, we have jack resistance from 407 to the 408 area. We have queen resistance from the 410 to the 412 area. This will probably hold a lot of weight today, where we get to and kind of reject the first time off of that level. And then king resistance from 413 all the way up to the 417 area. On the support side, we have jack support at 405 to the 404 area. Then we have queen support at the 402 to the 400 area. This area too will hold a lot of weight around that 400 area. The 400 area is where the market maker's expected move, the upper end of that market maker's expected move is. And if we start to come back down, it will act like a magnet and draw us into that area. And it's possible we can kind of come down and shoot through and kind of just kind of swaddle that area for a bit before making our mind up whether we break off going back up or break off going below. And the king support area is going to be 399 to 396. On a day like today, where larger time frames should be coming into power, and I say should be because I have missing data and I can't really see it the way that I want to see it or verify it. It wouldn't surprise me if we came down and popped below that 396. So kind of keep your head on the swivel, because there are some things that could possibly surprise you today out of nowhere, because that baton is getting passed to the larger time frames, the daily and the weekly. So you have to kind of imagine levels will be, or ranges will be, a lot larger. So again, be prepared, be ready for that, for the larger range. Now, the main thesis for today is bearish, closing below the 405.31 with a projected target low of between 400 and 396. The alternate thesis is bullish, closing above 405.31 with a projected target high of between 410 and 417. Now, because I expect the gap in internals, I expect to see a blend of both the main and alternative thesis, which means we could cover some of the lows in the main thesis and then reach for some of the highs in the alternate thesis. this is what I'm speaking of when I say be prepared for expanded ranges or larger ranges, because the larger time frames should be taking over that baton as far as in power, as far as ranges go. The current channel we are in is 397 all the way up to 416. It wouldn't surprise me if we cover every bit of that range today. Next minor channel is going to be 404 to 414, and actually that's a better version of what we could kind of cover today. Let me think. I know we just had some numbers come out, and that's why we have the big candle up. And I think the only thing left is consumer sentiment at 10 a.m. But everything's pretty much done as far as the main numbers that we were looking for to come out, which happened this morning, which has given us this strong candle, strong bullish candle this morning. From here, let me bring up the scenarios of the day. All right, the first scenario is our expanded range day structure. And I haven't said it in a while, but range days are very hard to plot because there are so many different scenarios that can take place on a range day. But the one thing to be very careful of is that this is going to be an expanded range day, which means it could have traits of a trend day. We could push boundaries and continue pushing and break out on these expanded range days. So the first scenario, or the expanded range day structure, we could look to set a decision area lower boundary around the queen or king support area before starting to rally for a good portion of the day. I do want to kind of caution for a vice versa scenario where we could continue up and set a decision area around the queen resistance area before falling pretty good and then seeing something like that for the remainder of the day. And remember, what makes this a range day is that we cross that previous close, yesterday's close, which is represented by the blue line. We cross it, close under it, and we usually have at least one cross of that cross and close around that previous close, and that gives us our range day structure. All right, let me bring up the next scenario. All right, our next scenario is our rounded reversal day type structure. We could get a continued push lower toward the queen or king support area and find midday chop around either the queen or king support area before spending the same energy we use coming down to go back up the second half of the day. I do want to be cautious of a vice versa scenario where we get something like this happening today as well, where we continue to push up from the open toward the queen or king resistance area, and then finding midday chop, and then rolling over the second half of the day. So be on the lookout for that as well. All right, our last scenario is our trend day up day type structure. We open gap up and start with a fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the morning. If this is an uptrend, I do expect this to be a pretty strong golden window. This morning uptrend would be pretty strong. But remember, something is just telling me, even though I have the gap and data, that this is going to be a blended day where we get that expanded range day, which means we could push the lower boundaries, whatever boundary we set on a range day. You remember, the regular range day, we set boundaries and basically chop in between those, that high and low boundary for the day. On an expanded range day, we set a boundary, we come back to it and continue to push that boundary further and further out. So that to me is why we have that expanded range day as the highest probability today. So be very cautious. Again, an expanded range may be in play today because from what I believe to be true is that we should be passing the baton to the daily chart time frame, but because there's data missing in the Thinkorswim platform, I'm unable to verify these things as I normally would. So again, be very careful today because of the expanded range, which means expanded risk. So you should have a great handle on knowing and understanding your risk. I hope this helps. And as always, have a positive trading day.